Ready? The second video in the series. The first video, obviously, I just showed you the indicators and drawings that I use on my charts uh, to both analyze the market and trade the market. So let's move to the analyzing part of the market. Typically, I am looking at uh, the 4 hour chart, okay, for my range that I'm looking to trade in. And that's with all of these lines, the uh, dealing range. um, the dealing range that I'm currently looking at. Well, dealing range theory is something that has really helped my trading. Uh, Not the actual execution part, but the reading the market part, okay, and figuring out uh, a bias for the day of what I'm looking for price to do. And if it does what I'm looking for it to do, great. If it doesn't, I also need to be malleable to be able to switch my bias and take a look at where price might go in the other direction uh, to try to form a trade plan there. Um, so we're in the weekend, so let's just look at what we might see for next week, right? Um, I'm always going to start off with a daily, and we've been in the last 2 weeks in this daily range here. Okay. So when I see a consolidation like this in a very tight range, I want to know where that started. Well, I can't see that on the daily because the push up actually started all the way down here days before we got into the consolidation. Okay. So I know we're in daily consolidation, right? That's my overall view. So knowing that, I have to be very careful because there's an argument for both sides of the market. Anytime we get up to the highs, we could possibly have a reversal back down to the lows. Same for when we get to the lows, are we going to go back to the high or are we going to break? Okay. Um, but I need to find out where this consolidation started at, and I can't see it on the daily. So I'm going to move down one time frame and look at the 4 hour. Okay. Now I have a better idea of where this started at. We had some consolidation right in here, and then we had the beginning push up to this high that then started consolidating. Okay. So I want to use this candle uh, and draw my range box. Okay. Uh, there we go. And I want to take it up to the high before we had the pullback. Okay. And I already have a template set for ranges. So if I pull that across and now take a look at what's happened on the 4 hour time frame, I can get a little bit better uh, idea of what I might be looking for come Monday morning. Because the market moves, through displacement, uh, consolidation, and manipulation. Uh, and those, who might not believe the market's not manipulated, I have to disagree um, because the big money traders, pension funds, hedge funds, banks, uh, all of that, they need a lot of liquidity to put in the orders they need to get into the market. So they have to move price to certain liquidity areas where there's more liquidity than other areas. And that's what happens in a range. Uh, so what I'm looking for here is are any breaks outside of the range. Okay. The first break we had was up here. Okay. Well, you could say here. So we did take this high, all-time high right here. Um, so the very first push up made all-time highs. Um, then we broke them here, but immediately rejected with a big gap down on the 13th. Um, that gap down, though, did not break the low of the range. It did, however, sweep some liquidity on these double bottoms down here and immediately shot back up. So what this is telling me is that there's a lot of liquidity down here. Okay. Um, and not as much up here, which you would expect. People are a little cautious right now with we have a good economy, but there are still some questions with investors out there as far as tariffs and uh, all of that, the tax policies that just got passed. Um, before that passed, we're a little cautious. Um, so as we look at price again, once we swept this liquidity down here, we shot up and had a pretty good little push through of the range. But here is where, the wicks do the damage and the bodies tell the story, right? Um, it did close outside of the range. And the very next candle tried to continue, but got slammed back down to close inside the range. Okay. So this shows uh, some strength to the sellers. Then we come down and we swipe these lows again, without getting to the bottom of the range, and we start to push up again. Okay? And this is where the manipulation comes in. A lot of people get long down here at these lows, and the market very quickly in one 4 hour candle pushes down and takes all those stops, even the bottom of the range. Okay? But all they're looking for is the liquidity. So they take all those orders that they got in down here and they go and displace them to buyers up here. Okay. Um, Now, what we've got here is a little bit more important. Uh, we actually closed well outside of range. Right. And then we came back down, but on Friday, we still closed outside of range. Now, this isn't a very big close outside of range. It's right in line with this one here. But the fact that we did close outside of range and closed at all-time highs, new highs, uh, that is significant to me. Okay. Um, so what does all of this mean to me? Well, we manipulated to the downside for liquidity, took that liquidity to the top, and now the question is, do we sell that back off uh, from these highs, or do we have a continuation of this move? Because we do already have manipulation. Okay, we have manipulation upside, downside, and then close above. Now, this typically will tell me to be looking for longs. Um, The only thing that's not typical about this is that we are at all-time highs, and we still have some questions left on the economy side. You know, the Fed hasn't started lowering rates yet. When is that going to happen? Is it going to happen? Um, there are still some tariffs that have yet to be uh, finished up with what I think investors would call a solid uh, conclusion to that. Now, the administration has said they're done. They've sent out letters to every country that didn't come to the table and make a deal, and we've placed our percentage on them based on the specific countries. Uh, and a deal was supposed to have been made with China, but we don't see anything about that deal. Don't know if it's actually tentative deal or it's a signed deal. As far as I know, and to be honest, I haven't done a lot of research into it, um, and I probably will look into that next week. So overall, what is my bias for the next week? Well, at this point, this is one of those dangerous spots that I have to be concerned with. I have an argument for both sides of the market. Okay. Um, we still have a lot of liquidity down here, but we have closed at all-time highs and closed above the range. So now I've got to watch other time frames a little bit more, uh, because obviously, if we're going to continue up, the lower time frames are going to tell me that before the 4 hour does. If we're going to go down and take internal liquidity and then go back up, the lower time frames again are going to tell me that. If we're going to reverse back down to the bottom of the range, again, I have to look at that. So, what's happened on the 4 hour chart? We broke the highs, okay, and then we've come down into internal liquidity. And that's all we've been doing is breaking external liquidity to come down and take internal liquidity to go then to external liquidity. Okay. And that's all we've been doing. So on the 4 hour, where's my internal liquidity? Well, if I look back for fair value gaps in this push up, okay, the first one I see is right here. Okay. Um, and this one's pretty important to take a look at. All right. So we have this fair value gap that was made on the way up. And let's put it out a little further. Actually, I'll need to fair value gap. There we go. Okay. But once we broke the all-time highs, we immediately came down and inverted this fair value gap. So that is now an inverted gap that we have to pay attention to. We also have this gap right here, okay, which is also important. Just because we inverted a 4 hour fair value gap does not mean we're going to continue downward. Okay? So if I take a look at this fair value gap, I can see that we've rebalanced it, okay, but we never were able to close below 50% of that fair value gap. Now, if you take a look at where the midline of that fair value gap is in accordance with dealing range, we've held the 25%. Any pullback that can hold between the 2.5 and the 3.1, okay, um, is definitely something I want to look at. So this is where I have to be very, very careful. Why? Well, we have support that held, but now we have resistance above us, okay, in this inverted fair value gap. If we're going to stay bearish, this fair value gap, inverted fair value gap, needs to hold, and we need to then roll over to go lower, which we've cleared the way for because we have rebalanced this price in this fair value gap. Okay. But the strength in the market is showing me that we're not going to close below the 25%, at least not yet. Now we've come up and we've hit that inverted fair value gap and we've bounced off of it a little bit. Okay. So here I have an argument for both sides of the market. And this is where I have to be very, very careful. When you have an argument for both sides of the market, you really need to be patient for good confirmation before taking any trades. Okay. But the overlying uh, way that the market moves is still in play. Okay. We've been moving in an uptrend, even in the range of taking external liquidity to the highs and coming down and taking internal liquidity uh, from the lows. So, how do I use this information? All right, let's see where we're at. All right, that's a little over 15 minutes. So, that's my analysis of the 4 hour, the daily and the 4 hour chart. That gives me my overall uh, bias for the market, which right now is neither bearish nor bullish. Okay. Because we are stuck in between two very important uh, PD rays, okay? The fair value gap and the inverted fair value gap of the 4 hour. Now, this is still tradable, but you just have to know that to be cautious. Okay. So basically, our range from 335 to 320, and you could even say the top of that, 338 to 320. So we have about a 20-point range here. Um, that we need to see what's going to happen. Now, obviously, in a day's time, the ES moves more than 20 points. So I know that I can wait for a look. I can be patient. I don't need to take the first trade that shows itself if I don't want to. So we're going to leave this video here. That is our daily and 4 hour uh, outlook. Okay. And I will leave all of these drawings up, okay, for Monday. Now, I don't want to see this range on my minute chart. Okay. So I'm going to take that off of the minute chart. All right. So now when I go over to my minute chart, it's not going to be there because a lot of times I will take these gaps and I will overlay them. Oh, no, 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 no. What the heck? Sorry. Oh, 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 I'm just losing my mind. So I put that 4 hour fair value gap. Did I not? Did, but the settings. See that minutes. I will. Oh shit. Sync with that one. This is the one I want. Okay. So that's not going to interfere. That's a 4 hour gap, and it's not going to interfere much. It's not going to cover my entire 1 minute chart like the range will. Okay. So a lot of times I will put my 4 hour fair value gaps and inverted fair value gaps on the 1 minute chart because I want to see where they're at in relation uh, to everything else. Okay. So as you can see, I mean, on a daily basis, I don't need to be taking any trades in here until I get confirmation of which one of these is going to break. Okay. I have plenty of room to play with. All right. So again, I'm going to leave this one here, and we'll move on to the next one as to what I see on the 1 minute chart that would get me to take a trade. Right. So we'll see everybody in the next video.